Hello, my fellow entrepreneurs. I am Michelle Davis, founder and CEO of A Bookkeeper for You. Welcome to Bookkeeping Sex. I know what you're thinking. What does sex have to do with bookkeeping? Bookkeeping, sex in bookkeeping. Really? Yes. Well, what I'm here to tell you is that we are all about the sex, supporting you, educating you, and expanding your perspective. But before I dive into all that, I want to ask you a question. Why did the scarecrow become a successful businessman? Why? Because he was outstanding in his field. Okay, guys, I know it's corny, and I will stick to my day job, I promise, which is why we're about to jump into some financial foreplay, caressing, and massaging the chart of accounts. So, guys, my company, A Bookkeeper for You, has been providing bookkeeping services to businesses all across the United States for more than 25 years. In that time, we've noticed that the chart of accounts gets neglected over and over and over again. Yes, I know that when you set up your accounting software, QuickBooks or Xero, or whatever accounting software you use, you get a starting chart of accounts. But that's just it. It's a starting chart of accounts. There are best practices that you need to follow and knowledge that you need to have to manage and maintain a great chart of accounts that gives you the end result that you want. Those best practices I'm about to get into right now. As we dive into the best practices, I want to first define the chart of accounts. Simply put, the chart of accounts is how you categorize your financial information. I like to think of the chart of accounts as your financial filing cabinet. Best practice number 1, begin with the end in mind. Have a solid plan. What do I mean by begin with the end in mind? The foundation of you getting the most fulfilling and satisfying financial report is your chart of accounts. That's the foundation. When you think of your chart of accounts, you want to think of the big picture. You want to think of your financial reporting requirements, understand your industry, and how you're going to get that set of financial reports that gives you the absolute best picture of your business and give you the tools to make informed business decisions. That's the climax. So you're going to begin with the climax in mind. That is best practice number 1. Best practice number 2 is simply using a logical structure. You want to categorize your like accounts together. For example, utilities, sub-accounts, electricity, water, gas. This makes it easier to read your financial information. So best practice number 3, keep it simple and consistent. You want to make sure that you're naming your accounts very simply and straightforward. Name it for what it is. No need to get fancy. Rent expense is good enough. You don't have to say premises expenditure. Yes, I have seen that, and I've seen worse. So guys, remember to keep it simple when you're naming your chart of accounts. So it's easy to understand, easy to read, and clear to the layman, whoever it may be that picks up your books can understand what you are referring to exactly without any confusion about what that might be. I also encourage you to make sure that you are assigning account numbers to all of your categories and numbering them by GAAP standards. And what I mean by that is making sure that we're able to identify what type of account it is based on the account number. And we're going to get into that in a little bit more detail shortly. Best practice number 4, plan for growth. You want to set up your chart of accounts in a way that is going to accommodate your expansion and growth. I'm pretty sure where you are today is not where you want to be 10 years from now. And I'm hoping that you will have expanded and grown, right? So you want to make sure that your chart of accounts is set up in a way that it is able to accommodate that growth without having to do a major overhaul to your chart of accounts should you have that expansion, right? So that takes you to understanding why I said you need to begin with the end in mind when you're laying out your chart of accounts, right? So it helps to accommodate things like when you actually grow and expand. You don't have to go through all of the headache of starting over. And best practice number 5, periodically review and update your chart of accounts. You want to take the time to take a look at your chart of accounts to make sure that it aligns with the changes and the growth within your company. So you want to make sure that it is being properly reviewed from time to time to accommodate any growth, any changes, and that is moving and changing with your company as needed. So now that we've discussed the best practices, how do we actually put that into play, right? And one of the first things I want to start with is, first of all, I promise you, I'm not going to give you an accounting lesson. That's not my goal here. But before we can get into anything, or before you can even begin to create a proper chart of accounts or maintain a proper chart of accounts, there's something you need to understand. And that is, you need to understand the different types of accounts, not the categories, but the different types of accounts. What I mean by that, assets, liabilities, equity, income, and expenses. Every single financial transaction you have falls into one of these categories. And if you don't understand these categories, you're going to have issues with setting up your financial reports. And understand this: garbage in, garbage out. The accounting software can only put out what you put in, right? So we need to make sure we understand assets, liabilities, equity, income, and expenses. Okay, so assets. What are assets? Those are the things that your company owns, right? The things that are in what I like to call your treasure chest, the things that are of value to you, right? What are examples of assets? The cash you have, money that is owed to you by your customers, the equipment that you own, the furniture that you own, the buildings. Those are assets, right? Liabilities. I like to think of liabilities as the dirty debts, right? Nobody wants debts, but it's necessary. However, so debts is the things that you owe. Those are your IOUs, right? Bills that you owe, credit cards, loans. Those are your liabilities. And equity is the owner's financial stake in the company. Basically, what's left over after you have paid off your debts, right? When you take your assets, pay off your liabilities, what's left over is what is considered your equity. What is income or revenue? Revenue is the money that comes in from selling products or services or getting commissions or royalties or whatever that is. That's your income. And your expenses is what you pay for to run your business, right? Your monthly recurring transactions that you spend money on to keep your business going. Those are your expenses, right? And there's a lot of details surrounding each of those categories, but we're not going to get into that. I just need you to understand that in preparing a chart of accounts, you have to understand what type of account it is, right? Is a utility an expense, or is it an asset, or is it a liability? Is the bank account asset? Is it a liability? Is it income? When I'm going to set up a new account in my chart of accounts and I'm like, okay, so I just sold my car that was owned by the business. How do I account for that? Or, I just paid the electric bill. How do I account for that? Is that an expense? Is that account set up as an expense in your chart of accounts? It's really important that you understand that. So the next thing we talked about is assigning numbers to your chart of accounts and doing that to GAAP standards. And I promised you that I would get into what I meant by that. Okay. So I highly encourage you to always assign numbers to your chart of accounts because it helps to identify what type of an account, a category is. All right. What I mean by that, and before I even get into that, I'm going to say to you guys, when I see chart of accounts numbered incorrectly, it gets under my skin a little bit, just a little bit. So I'm going to beg you to please, please, please pay attention to what I'm saying. And if your chart of accounts is out of whack, please go and fix it after watching this video. Okay. So when you're numbering your chart of accounts, you don't just assign any number, okay? I look at a chart of accounts and I see assets labeled with 9s and 8s and 7s, and I see liabilities labeled with 4, 3, 2s. I mean, 4s and 3s, and just randomly, just random numbers assigned. There is a method to the madness, guys. Okay? And I'm going to ask you to listen carefully. When you set up your chart of accounts, assets, anything that is an asset must be started with a 1. The number needs to start with a 1. Anything that's a liability must start with a 2. Anything that is equity should start with a 3. Anything that is income, revenue, starts with a 4. And any expenses starts with 5 through 9. Okay? You don't just assign random numbers. Now, if I look at a chart of accounts and I see a category that starts with 1s or categories that start with 1s, then I'm supposed to know that those are all asset accounts. I shouldn't look at your account and see numbers 1s and those are actually expenses or something else. So there is a method to the madness. And I want you, if you haven't set up your chart of accounts correctly with numbers, 1, I'm going to ask you to set it up with numbers. And 2, I'm going to ask you that you make sure that you use those numbers correctly. So make sure it's a 1 sequence for assets, 2 sequence for liabilities, 3 sequence for equity, 4 sequence for income, 5 through 9 sequence for expenses at the very least, guys. We can get into a little more nuances as it relates to that, but at the very least, have your accounts numbered in that order. And please, if you haven't done it and it's a mess, please take the time to do this. Your chart of accounts is the foundation of the financial reports that you get, thereby the foundation by which you make decisions about your business. Therefore, I am asking you, please set it up correctly. Take the time to do that. And if you're not doing it yourself, make sure that your bookkeeper is doing it correctly, and that when you send it to your accountants, they're getting financials that are really in tip-top shape and looking good. Additionally, guys, you do not want to make your chart of accounts too long. Don't add too many categories to your chart of accounts. Your chart of accounts is not a dumping ground for every single little thing that you think you need to keep track of. The accounting softwares are built with additional features that allow you to get more detailed information on the things that you want to keep track of. Your chart of accounts is not the place to do that. So I'm asking you, do not add too many categories to your chart of accounts. The longer your chart of accounts is, the harder it is or will be for you to read your financial statements or create financial statements that are beautiful, that make sense, that are easy to read, that give you the information that you need at a glance. So to recap, guys, I started out by saying we need to caress and massage our chart of accounts. And I'm getting to that again, right? We want to make sure that our chart of accounts is treated with love and that we caress and massage our chart of accounts until we get it to exactly where we need it to be to generate those beautiful financial reports that are easy to read, gives us the information that we need to make the best decisions for our business. If your chart of accounts are not in good shape, please take the time to follow the best practices that we've been discussing here to get your chart of accounts to where it needs to be. All right. So that's it for me for today. I'm going to ask you to like, follow, and share. I'm going to ask you to subscribe to our channel. This is our very first episode, and we want to thank you for taking the time to be with us. Additionally, if you would like a health check for your chart of accounts, a free health check for your chart of accounts, please comment in the comment section below, or send us an email to freecoa@abkforyou.com. freecoa@abkforyou.com. And the first 50 people to send messages to that email address will be entitled to a free chart of account health check. See you next time on our next episode, which will be up in 2 weeks. Thank you.